So I was talking to this friend, right? And they were telling me about how they totally missed out on selling their Bitcoin back in 2021
Yeah.
when it was, like at its peak. And they were kicking themselves. Like,
Oh, I bet.
if only I had sold then. It really got me thinking, we spend so much time talking about how to get into crypto.
Right.
We don't always talk about the other side of it, when to get out
Yeah.
and how to do it smartly.
Yeah, absolutely. That's like half the battle, isn't it?
Totally. And that's what we're diving deep into today. We're going to be talking all about creating a solid exit strategy for your crypto investments, especially as we're, looking ahead to 2025, making sure you're prepared.
Smart. A lot of people, they get so caught up in the hype, they kind of forget about the future, like what happens next.
Exactly. So think of this as your cheat sheet. All right, we're going to walk through 5 key points to keep in mind as you navigate the exciting, but let's be honest, sometimes volatile world of crypto. So first things first, we got to talk about market trends, right? Timing is everything.
It is.
We've all heard the saying, buy low, sell high. But how do you actually do that?
Right.
How do you do that with crypto?
Well, I think the first thing to understand is that crypto markets, they're not that different from any other financial market. They move in cycles. Think about Bitcoin back in late 2017. Remember that surge? And then what happened in 2018?
Yeah.
Correction. So history, it kind of repeats itself just in different ways.
So looking back at that historical data, especially with, Bitcoin, it's been around long enough.
Exactly.
That we can look at the price fluctuations over the years.
Yeah.
That can give us some clues.
Absolutely. It gives you a sense of okay, what could potentially happen?
So we're like looking for patterns to try to predict what might happen in 2025.
Exactly. But there's another piece to it, too. It's not just about the patterns. You've got to think about what we call market catalysts. These are like
what is that?
Those unpredictable events that can really shake things up. Like imagine a major government suddenly says, hey, we're embracing crypto.
Oh, wow.
Or a huge tech company starts accepting Bitcoin. That kind of news, sends prices skyrocketing.
But I imagine on the flip side, some bad news or like some regulation.
Yeah, exactly.
But the opposite effect.
Absolutely. That's why it's so important to stay informed. What's happening in the industry? What are the technological advancements? What's going on with regulations? All of that matters.
So timing the market. It sounds like it's a delicate dance. You're looking at the historical patterns, but you're also keeping your ear to the ground for what's happening right now.
Exact.
Sounds kind of stressful, to be honest.
It can be. It definitely can be. That's why having a plan is so crucial.
Totally. And even if you get the timing perfect, right, you got to think about the tax man.
Oh, yeah. That's a whole other beast.
Nobody wants a nasty surprise, right? Nobody.
When they've made some profits from their crypto, and then, boom, tax season hits.
And that's where things can get really tricky, honestly. Tax laws around crypto, they're complex. They're still evolving.
Right.
Like, for example, did you know in a lot of countries, just selling your crypto is a taxable event?
Wait, really? So even if I don't cash out into like dollars or euros, just trading one crypto for another?
Yep. That's a taxable event.
You could still owe taxes.
You could. It's called capital gains tax. And it applies to profits made from the sale of assets. And guess what? Cryptocurrencies count.
Wow, I did not know that.
Yeah, it's a big one.
So it sounds like, you need to talk to someone who understands crypto when it comes to taxes. Get that advice.
Absolutely. Get that personalized advice.
Okay, next up, let's talk about diversification.
Okay, yeah.
It's like that old saying, right? Don't put all your eggs in one basket.
Classic advice. But for good reason.
Right. But how do you actually do that? Right.
When we're talking about crypto.
Well, think about it this way. Let's say you put all your money into one cryptocurrency.
Okay.
And something happens. Like, I don't know, a major security breach on that platform.
Uh-oh.
That's it. You could lose everything.
Yeah, that's not a good feeling.
Not good. Not good at all.
So diversification, we're spreading out the risk.
That's it.
But how do we actually do that? What does that look like?
You got to look beyond just crypto. Think about different asset classes like, traditional stocks and bonds.
Right.
Real estate, maybe even precious metals. Just build a balanced portfolio that can handle those ups and downs.
So we're not necessarily saying get rid of all your crypto.
No.
But maybe take some of that and put it into something a little more stable.
Exactly. It's all about finding that balance.
Yeah, that makes sense.
What are your goals? What's your risk tolerance? That's how you figure out the balance.
Okay, I like that. Now, let's shift gears a bit and talk about liquidity.
Huh?
I feel like that's a term that gets thrown around a lot.
It does.
Can you break it down for us? What does liquidity actually mean?
Think of it like this. How easy is it for you to turn your crypto back into cash when you need it?
Okay.
Some cryptocurrencies, they're very liquid.
Okay.
You can buy and sell them quickly.
Got it.
On those major exchanges. But others, not so much.
So you could have something really valuable.
Yes.
But if it's not liquid,
exactly.
then it's kind of useless if you need to, like,
exactly.
access your money quickly.
Exactly. So what affects liquidity? It's things like trading volume. How many people are buying and selling?
Okay.
What platform are you using? Some have limits on how much you can withdraw. Some have crazy delays.
Yeah, that makes sense. You don't want to be in a situation where like, oh, I need to sell, but I can't get my money out.
The worst. So plan for it.
Okay, and our last point, but certainly not least, it's about emotional preparedness.
Yeah.
This one's a little bit harder to like put your finger on.
For sure, it's not a spreadsheet.
Right, exactly.
Yeah.
But I remember reading stories
Oh, yeah.
about people who just panicked
I know, right?
and sold all their Bitcoin back in 2018 when it dipped. And then, of course, it rebounded.
And they regretted it.
And they were like, nope.
The worst.
So how do we avoid that? How do we stop ourselves from making those emotional decisions?
That's the million-dollar question, right?
Yeah, it really is.
Emotions, they can be your worst enemies, especially in a market like crypto. It's so volatile.
Right.
Fear and greed, they're not your friends. They cloud your judgment.
Totally.
And then you end up making impulsive decisions.
So what do?
You got to have a plan. Set clear exit criteria ahead of time.
Okay.
Figure out what's your price target, when will you sell, how long will you hold your investment.
So you're not just like reacting to every little, dip or spike.
Exactly. Don't get caught up in the FOMO, the fear of missing out.
Right, the FOMO.
That'll make you buy high and sell low every time.
Yeah, that's the opposite of what we want.
Exactly. Stick to your plan.
Okay, I like it. So we've covered a lot today, haven't we?
We have. Market trends, taxes, diversification.
Liquidity, emotional preparedness.
It's all important, and it's all connected. If you understand these things, you're going to be able to make much smarter decisions as we head into 2025.
Totally. So as we start to wrap things up here, any final thoughts for our listeners?
Just remember, start with yourself. What are your goals? What are you trying to achieve with your crypto investments? Think about your risk tolerance. And I think most importantly, ask yourself this. What would you do if the market crashed tomorrow?
Oh, wow.
Would you be prepared?
That's a really good question to think about.
It is.
Because having that exit strategy,
it's
just as important as having the strategy to get in the first place.
I agree. Being a responsible investor, that's what it's all about.
Absolutely. Well, thanks for walking us through all of this.
Of course.
It's been a fascinating deep dive.
My pleasure.
And to our listeners, remember, this is just the beginning.
Yeah, keep learning.
Keep researching. Keep asking those questions. And we'll see you next time.
Until then.
Bye.
See ya.